Good morning, everyone. Today is Wednesday, November the 14th, and this is SPY Outlook for the day. Yeah, sideways. Very, very, very sideways. If I put it on an hourly chart, you can see that just a little better because this range event is tightening up just a little. We can see that we're really, really tight here. Now, here's the thing. We've got fiscal cliff event. Everybody's saying, hey, something's going to get done. Well, we don't really know, and the market is acting like it doesn't have any clue what's going to happen. There's a great deal of indecision, and when there's indecision, it's simply not a good place to trade, right? I say this all the time, but it really, really is true. The difference between someone who trades well in the market and someone who doesn't is the person who trades well. And well is a very definitive term. That means consistently over time, not your great big knockout of the park and then everything else is, hit and miss. A consistently good trader can look at the market, establish the fact that there's little to no momentum, and say, you know what, I'm not getting involved. And if I am going to get involved, it's going to be very small size in a very specific range, moving from one level to the next. That's a controlled technical trader who says, hey, listen, not a good space for me. I don't have an edge. And really, that's the big question. Where's your edge? Remember, you're playing against all kinds of other people, most of them sitting in spaces where they've spent hundreds of thousands of dollars on their education, their trading education, right? If they're sitting in some hedge fund or some institutional space where they're moving lots of money, or they've built some kind of algorithm, and that takes a particular type of education, certainly. So they're very well educated, they're very capitalized, and they know exactly what it is that they're doing for the most part. And here we come in and try to play with them. Don't you think we need an edge? Yeah, the answer to that would be yeah, unequivocally yes, we need an edge. We don't have one here. Why? It's moving sideways, the market's not resolved, there's little to no momentum, and we've got all these things sitting on the outside that really are of extreme importance for us to have a look at. That being said, up above 139.20, looks like we'll have upside momentum. Down below 137.50, looks like we'll have downside momentum. Sitting in the middle there, trading level to level might be the very best thing for you. The problem is, if you decide, hey, I'm going to trade level to level, and you end up getting a patch like this on the day that's, barely 50 cents wide, is it worth it for you to participate? Are you fast enough to understand the cycles where you can get in and out? Maybe yes, maybe no, but the fact of the matter is, most of us who watch this video are interested in how we get rid of bad trades, right? That's what we're interested in, getting rid of the bad trades. And this is a space where you're going to make a lot of them if you decide you're going to put your feet in here and get going. Also, this is not a place that you want to initiate swing trade events unless your chart looks absolutely ready to go. Absolutely, it's been waiting on the level for weeks. There it is. And there are a few charts like that. There are. We'll be looking at a few of them, and that's absolutely there are. But see, that's few and far between. And most of the professional traders are saying, you know what, I think I'm going to sit on the sideline here, and if I play a little, I'm not going to be putting in a bazillion dollars and putting myself completely at risk. You've got to manage your capital exposure, folks. You want to trade well enough so that you get to trade another day to get better. You don't want to throw away whatever it is that you've got in the market. And way too many of us are undercapitalized trading in this market. We're trading with very small accounts or accounts that should be bigger, but it's all we have, but we end up playing it like we're rolling dice. And you cannot do that. If you continue to do that, you won't be trading this time next year. All right? You can't be a slugger if you've got a small account. If you've got a very large account, you could work at being a slugger, but those home runs are so few and far between, right? Home run hitters strike out the most at the plate. And they're so few and far between, they better be really, really good, or you're going to end up having no money in your account. So that's it. Word of caution, it's going to be like that until things get squared away. We've got the holidays coming up, so there's going to be lackluster volume. So we're going to have to be extremely selective about where it is that we trade. All right, midline 138.50 there. Watch to see if anything happens. Me, certainly I took a couple of nice trades yesterday in the TF. Worked out pretty well. A couple of nice trades in the ES, but overall, just a mess. An absolute mess. All right, so be careful trading. Hey, if you can help yourself, don't trade and just study. Study the market. Turn on demand trading on, playback, whatever it is that you've got in your trading platform that allows you to see backwards in time. MotiveWave has a fantastic playback feature, and I mean, it is absolutely beautiful. So that is also something that you can use. For those of you that do use MotiveWave, practice so you get better and ready for the times that we get out of here, for the times that we are in this space and then we start doing this. You got to be ready for this. But you can't play around in here and deplete all your emotional capital so that when something like this comes, or maybe it's like this, whatever it is, up or down, doesn't matter. You're just looking for a trend. If you deplete all your emotional capital and your physical capital working around a place like this, you're not going to be ready for the move. All right? So, good luck. That's it. Take care.